Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at the S&P 500 daily chart here. But first, if you're not already a member, go ahead and visit the home page and start your 100% free 7-day trial today. All you need to do is enter in your name and your email address and you're going to get immediate access to all of the member benefits like the live broadcasts, chat room, watch lists, daily member videos, and webinars, and an education from a mentor such as myself who truly cares about your success in the market. It's a great opportunity, and we'd love to have you. All right, so let's look at the S&P 500 chart here. As I mentioned, I posted it publicly, and for our members, that we were likely to see a fadeable gap up. That's exactly what we got. You know, I don't like to include a lot of fundamental analysis or news analysis in my trading, but in this case it did have a small impact on my trading because futures were ripping last night. And that's why we got a big gap up today in the S&P 500. And the reason that we were gapping up was based off of an opinion poll based off of the Brexit decision that's going on Thursday. So not an official decision, just an opinion poll. So nothing real actually happened. So that gave me a lot of confidence shorting these highs up here on the S&P 500, which is exactly what we did. And we got a nice fade from the open, from these highs as well. And we're likely going to fill this gap down here. So moving forward, so why was this a fadeable gap? Well, first of all, this is not a super healthy chart. We didn't have any kind of a big reversal candle or anything like that. And I look at 500 to 800 charts a day, so I'm seeing the market as a whole, and I'm not just looking at this one chart right here. And I'm seeing that we weren't really seeing a lot of breakout potential in the market. I could have been wrong just as easily, but the probabilities were in the favor of gapping down. So the reason why 209 is resistance, well, it's from all these candles over here. So we've got about 5 or 6 candles where that 209 level is resistance. We also have the 8 exponential moving average, which crossed below the 20 period exponential moving average, and those 2 candles are right around here. It's right around the middle Bollinger Band as well. So I suspect that we're going to come down here and fill this gap. Most likely tomorrow. Could happen in the next couple days. We'll see what happens. But if we do get another gap up tomorrow, we're going to have 2 gaps to fill that are very close by. So I believe we're going to fill not only the gap that would be created from tomorrow morning, and this is if we get a gap up. I'm not saying we're getting a gap up. I'm just saying if we get another gap up, it's going to be a nice gift, in my opinion, short. So we've got that gap that'll fill, and then we've got this gap that'll fill, and then we've got support from the lows of these 2 candles. So it could act as support. We'll see how it acts when it gets down there. I'm not really interested in playing to the long side personally until we get a touchdown here at about 204. 204, in my opinion, is going to be the make or break level. So the best risk reward is to look for a bounce down here. We're kind of in no man's land in here, and I definitely favor the short side, definitely in the near term. Definitely going to be covering around that gap fill right there. Because of the gap fill and because of the longer lower wicks of these 2 candles, we could see some support there, but just because I want to cover down here doesn't mean that I want to switch to long just yet. We've got a gap down here that may want to fill right around 204. 226, and then this major support down here at about 204. So 204, major support, likely gets at least a short-term bounce on the first touch. After that, who knows? But we do have a gap up here that may want to fill. So we got a lot of things going on this week. We got a Brexit decision, so that could weigh on the markets in either direction. So we'll see what happens. I'm personally keeping a light, sticking to A++ setups, and I recommend that you do the same. So we'll see what happens. But 209 support. I'm sorry, 209 resistance. About 206 and 204 are the supports that I'm seeing. Above us, if we do end up breaking above 209, we've got about 212 to 212.40, which are great areas to short up there. So keep those levels in mind. We may end up coming back up there. We do have a gap at 212 to fill. So we'll see what happens. Thanks for watching the video, guys. Appreciate it. Stop by next time. Again, if you're not already a member, start your free, 100% free 7-day trial. All you need to do is enter in your name and your email address, and you're going to get instant access to all of the member benefits. It's a great opportunity, and we'd love to have you as a member. We'll see you over there.